Hello everyone, thanks for tuning in. Do me a favor and let me know in the chat room if you can hear my voice and you can see the screen with Check Onchain. Thanks for tuning in. Christmas Eve, it's coming to the end of the year. It's been, what a year it's been. You know, watching BTC basically tear through all-time high like it was butter. The global macro, you couldn't pick a more bullish environment for Bitcoin and cryptocurrency in general to be live. We've seen some fantastic price candles on Decred, so it's happy days coming into the end of the year. So what we'll do today is we will run through this new site, checkonchain.com, which is a bit of a baby of mine that I've been working on for some time. And essentially, what we're trying to essentially deliver with this particular module. So what Check Onchain has always been about is trying to bring many of these on-chain metrics and things that are otherwise within the realm of hedge funds and the smart money. These are the type of metrics that these guys will be looking at when they're placing trades, understanding market cycles, trying to establish whereabouts we actually are in the whole sequence. So ultimately trying to bring a lot of those tools and the understanding and the knowledge about how to apply these metrics to a far broader audience. So that's really been the goal of this thing. It's an education platform. It's trying to bring edge and charts to people who would more or less otherwise not have them, and give you the lessons and the understanding behind it as well. So let me know in the chat room if you can make sure that voice is coming through and stream is working okay. So warning, current bitrate, no, it's not looking very good. Right. So what we'll end up doing, let's run through some of the cyclical metrics. So we're going to look at a number of the a bit of the path that Bitcoin has carved through the this week. What actually brought it up to the all-time high. Look at some of these metrics as to where we are in the bull cycle. And just understanding a little bit where, okay, thank you for confirming, gliding quickly. We'll let this kick on. So what we're going to look at here is the actual flow of where Bitcoin has come from. A lot of these metrics, you see these 4-year halving cycles, right, that play out. Bitcoin halves, you then get the excitement and the momentum. It then takes a bit of time for the markets to digest that, the coins to actually start coming through. And the miners then have to, there's increasing sell pressure, and then eventually you get more and more buyers that are eating up less and less supply. So Bitcoin is this cyclical creature, and its market cycles have really played into this. So let's actually start by looking at where Bitcoin exists within that market cycle. And just before we do, so with Check Onchain, at the moment it includes Bitcoin and Decred metrics. Increasingly rolling out, so each of these things here will take you through to we've got our set of Bitcoin metrics, we've got Decred metrics, which is surprisingly we've developed quite a few of these. Increasingly we're starting to pull in Monero metrics. Now obviously data is limited on Monero because it's all private, but we can start looking at things like transaction counts and compare them between the 3 chains. And then starting to also roll out some of these research papers. So the challenge with releasing a paper like this is that the charts are essentially static. They're a snip in time. What I've tried to do is bring most of these charts that you will see in my research papers and actually bring them live so you can see how they're progressing. So you can take the knowledge that you learned by reading that paper and understanding what the mechanism actually was, and then essentially see how it's developed from that point onwards. So for Bitcoin, they're broken down to a number of sets. So we've got magic lines, which is essentially the principal moving averages, realized value, which is then looking at, what is the average cost basis of the market, mining metrics and supply stress. This is looking at, whereabouts are the miners in their cycle. They're the largest natural seller. So obviously they're going to have, where their sell pressure comes from. Are they under income stress and they need to sell more or not? That's all going to play a role in price action. Performance metrics is really looking at, essentially the performance of the chain. What kind of transaction volumes are we getting? What happens if we're comparing that transaction volume to our market cap? Is it, is the chain worth what it's being used as, right? Are lots of people moving coins around and actually getting utility out of the network? Is it settling a lot of value? And if it's not, does that mean that it's overvalued or undervalued? And what we're going to start with here is actually these cycle metrics, which potentially should be brought up to the top. But this will look at cycle since market lows. So this is since the capitulation point from each cycle, and essentially looking at what kind of growth do we get from that point on. So if we look at this chart here, this is saying that from the capitulation point, so for the current cycle that we're in, I've pegged the capitulation point back in December 2018. So after we fell off that cliff from 6,000 to 3,000, that essentially set the generational low. And our current cycle is here in orange. So you can see the original cycle back in, the early days, 2010 through to 2012. We've got a very, the level of gains here. So this left-hand axis is the growth multiple. So essentially 100x, 1000x. And you can see that just going from, a price of nothing to a price of, a couple of $100 is a substantial move, right? You're going to get a fairly significant price appreciation from cents to dollars. In our second cycle, so this is the one that most of us are familiar with when we look back at, so that was in 2015 or 2014, we had the capitulation, we had a 2015 bottom that formed, and then we had the run up into the 27 market. Now, what's really interesting about this current cycle, so I'm of the opinion, and I think Willy Woo actually spoke about this recently on the What Bitcoin Did podcast. I'm of the opinion that the bull market started back in on April Fool's Day back in 2019, where we had that short squeeze. And from that point, we had this very substantial rally off the bottom. And the indicative side of that tells me that was the start of the bull market is how it just sucked the air out of the room. Everyone was selling everything to get BTC. And that rush, that massive rush of people going, oh my, I do not have enough BTC, that was the initial impetus that actually instilled confidence. Now, despite the fact that we had a blow off top, because you can actually see the pace, how quickly we rallied, it was actually, it was almost back into 2012 days, right? So we had a very, very powerful rally up to 14,000. And it naturally then has a fairly long sell-off because this particular bear phase, you can see here in the red, this was the previous one, it was almost twice as long, if not more, than the bear phase that we had through this current cycle. So we didn't actually spend a great deal of time underneath the realized price, which is what we'll talk about shortly. That, we didn't have a long accumulation period. Then we had this massive lift off and everyone realized I do not have enough BTC and it woke everybody up. We then had the plus token Ponzi that also drove this, but then was part of the selling pressure through here. And then we had our COVID sell-off. But what you can see is that actually that whole process is roughly about as long as the previous capitulation period, right? If you remove this section of bull trend and you just take this bear market and this bear market, you would probably end up with something that's not too dissimilar, a year, 300 something days. And it's actually brought, this whole process has brought BTC back in line with previous equilibrium. So you can see fascinatingly that we're actually following a very similar trend to what we did back in the 2016, 2017 bull run in terms of gains from the bottom. So I find this to be a really interesting roadmap. Now, naturally, things are not going to follow the same trajectory all the time. It's fascinating that it does in this instance, but it kind of gives you a bit of a gauge that we're similar. We're in a similar type performance to previous bull markets. So we can take that knowledge set that we're kind of in this similar stage, and we can now start looking at some of the previous metrics and seeing how that compares to where we're at the moment. So let's take that and move on. So importantly, let's go up to this guy here. So the Mayer multiple. So the Mayer multiple is the ratio between price and the 200-day moving average. And what that essentially tells you is how far away is price. So this is the Mayer multiple here. How far away is price from the 200-day moving average? Now, when you have a very high value, the 200 days here in pink, you can see that price is a long way from the 200-day moving average to the upside. When you have a capitulation event, when we're down in this green zone, you can see that price is a long way from the 200-day moving average on a relative basis. So we can basically construct this oscillator. And the reason that the oscillator is important, you can actually see, if we look at this phase here, so let's take from this grid line to this grid line, which is fairly nicely our bull trend, you can see that the Mayer multiple, here's a value of 1, meaning price equals the 200-day moving average. You can actually see that price has found support and it's existed through that whole bull market, has existed above the 200-day moving average. Now, when we swap over into a bear market, you can see the exact opposite. Price is consistently below the 200-day moving average until we get the break above, and then away we go. We're back above on top of the 200-day moving average until we go into a bearish trend and we're back below. So you can see that over time, the 200-day moving average is kind of it's the elastic band that price is always going up and down below. Sometimes it goes a long way to the upside, sometimes it goes a long way to the downside, but over a long enough time frame, it always snaps back to the 200-day moving average. So it's almost like the long-term mean. And obviously lots of traders are looking at this going, hey, this is, bull bear cycles and all the rest of it. So, there is a reason why the Mayer multiple has the significance that it does. So let's now look at the previous bull trend, because we can see that we've basically come back in line with that. Now, these pricing bands, these extra dashed lines, they represent basically a measured distance, some distance away that has consistently shown, important price action. So during this bull trend, let's look at this point when we actually break up above the 200-day moving average. Price now exists inside. You can actually see this little channel, right? So this is the early disbelief bull phase. You can see that it's supported by the 200-day moving average, and it's bouncing off this first caution line, right? It's basically within that channel. Then we go through the process of acceleration, right? So this is like a huge FOMO move, which, by the way, lines up almost exactly with all-time high. So we break all-time high, and then it never really goes below that caution line. See how it actually jumps up into this next channel? This is phase 2, right? So this is phase 1 of the bull market, the disbelief phase, where people can't really believe that it's going higher. They've got PTSD from back here in this horrible bear market. They keep thinking it's going to sell off. You get these big sell-offs, but it keeps rallying until we break all-time high. Then it jumps up into this next level. It doesn't come back and revisit the 200-day moving average. There's too much buy support, right? So when we're at this phase now where it moves into the second phase, the acceleration phase in the bull, and then at the final leg, it explodes up through that channel and goes up to this final strong sell level, right? So you can actually see early bull, mid bull, euphoria to the top, right? If we go back and look at this previous cycle, very similar. You've got the early bull. In this particular bull market, because this was such a rapid and crazy price appreciation, this one tends to give, you can actually see the long, slow trend in this channel. With this guy here, there's a lot more volatility because we're talking about cents to dollars. So there's a whole lot more volatility. And many of the metrics, you can see that it basically exploded up too hard, too fast, and got hauled back into the channel. Right, and then it went for that final leg to the top. So, there's layers to all this thing, but in particular, this trend, you can see that fairly well ordered up into acceleration and then euphoria. So if we look and we combine this one here where it went too hard and got hauled back in, too hard, hauled back in, and the 3 phases, if we now look at our trend, so we had our initial explosion that went too hard and it got hauled back in. Right? And in fact, it got hauled back in so hard, it got pulled under the 200-day moving average, and then we got this capitulation level. But then it jumped back in and started trading, right, within that channel, right? So this is somewhat similar to what we had back here. This 2019 rally, which had, the plus token Ponzi scheme that was driving much of this buying and then selling. So this rapid appreciation and then sell-off is far more similar to back here. So it's actually showing similarities across this particular metric to both previous cycles. Now, this is where we were back at 18K or 19K, consolidating at all-time high. And you can see that that break above the 200-day, above this caution line, is essentially the same as when we ripped above here at the all-time high. So the ultimate question that we need to be asking is, are we going to maintain within this second channel, right? This is kind of the second stage of the bull market. And I think this is really my guess is the probability is yes. But what this is trying to explain is that we're in this position where if we can hold within this upper second channel, right, then the probability is that we're actually moving into this second half of the bull market. And therefore, at some point, we should be expecting the euphoric peak to the upside, right? So this is basically saying that traders are bidding it and buying before it even gets to the 200-day moving average. There's so much buy support, it just cannot get back to the 200-day. And it could very well be that we're in this phase of the market where the Mayer multiple never comes back and touches the 200-day until we get that final blow off top. So let's now transition to the realized price and the MV/RV ratio. So fairly similar in its construction. It's the ratio. So for those who don't know, the realized price is essentially, or the realized cap is like the market cap. Instead of valuing all coins at the current spot price, every coin is valued at the time when it last moved. So if you bought a coin at 10,000 and you moved it to your wallet and it hasn't moved since, it will still be priced at 10,000 according to the realized price. Market cap can move around, but until it moves on chain, it will remain priced at 10,000. Now, if price was to crater down to 1,000 and then you spent the coin to go and sell it, then it's going to get repriced from 10,000 to 1,000. So $9,000 worth of value will disappear from the realized price, realized cap. If you sell it at 20,000, it's the opposite. It goes from 10,000 to 20,000. It's now been repriced higher and the realized price will increase. Yep. So as you can see, as in the previous cycle, the realized price is here in orange. So this is essentially the cost basis. What is the price on the aggregate? When did everybody last move their coins? As price increases, more people are buying and transacting on chain. You can see this early bull, right? So this is very similar. There's that acceleration that we talked about earlier. Here's that early disbelief bull. You can see that the realized price is it's creeping higher, but it's not mooning. That's telling us that people are buying, but they're not rushing in, right? There's no FOMO at that point in time. So this is before all-time highs, right? So people are buying. This is smart money. Sorry, smart money is accumulating here. This is when the almost as smart people are accumulating. So we're getting a little bit of a repricing. And then look at this. As soon as we break above the all-time high, bang, realized price really starts moving. This acceleration, this gradient that it wants to move higher is telling us that way more coins are moving on chain now, right? The volume that's occurring, this is starting to look a little bit like FOMO. And simultaneously, we have very similar pricing bands here and here. You can see that as it broke above that level, it found support on it each time, and until it basically rallied up to the all-time high, right? And this is the exact same pattern. So what we're starting to see is we had this gradual move in the realized price, and here we are breaking all-time high. Look at the acceleration. The gradient, the slope on this line is accelerating. So that is, again, a second piece of evidence saying that now that we break all-time high, this is starting to get into the second phase of this bull market, right? So this is how we use these tools to understand where we are in the market cycle. Again, nothing is going to repeat as it did in the past, but we can certainly use it as a roadmap to understand more and more about, where we think this market is actually going and what is the past history that gives us that evidence, right? So, here's our MV/RV ratio, which is more or less telling us that same story. So we're now heading into this point. You can see that we're essentially in this zone here. So you can actually see, and some of you may be surprised by this, but if you were to take previous examples, right, previous market cycles as, a bit of a roadmap, again, it's not perfect, but a roadmap, you can actually see we've run through a large portion of the bull market, right? We're in kind of the third innings potentially. And now, the market has certainly changed. We've got institutions buying Bitcoin and things are happening like that, but we are no longer in the a quiet accumulation phase. We are moving into a far more aggressive and acceleratory type market condition. So this is kind of what I'm certainly looking at is I think we're going to get a pullback at some point, but the question is it going to be of any depth, right? Is there too much buy support and significant buy support that's potentially going to keep pushing this thing until we move into this, this second phase of the bull? And we're getting this acceleration in the realized price, which again is telling us we might be heading into that second phase of cyclically rallying higher. So that's two very important metrics which have a very long trading history, telling us a very similar story on that front. Now, on a very similar note, these are experimental metrics, these gradient oscillators. These were originally developed for Decred, actually. However, what they're essentially doing is, we were talking before about how the realized price, let's turn off some of these things. So we were talking before about how the realized price has a gradient, right? This is a very soft, slow gradient. This is an acceleration gradient, right? More coins moving on chain, less coins moving on chain. The market, the actual price itself also, right, has that same effect. Now it's more volatile, but it has a high slope, a downward slope, right? High slope, relatively over the long term, flat, right? Down slope. And all of these slopes have different magnitudes. This would be flat. This would be, steep downside. This would be massively steep. This would be flat. This would be massively steep to the upside, gradual. So all of these, this is called the gradient. This is the rate of change. How quickly is price changing over some measured distance? Now, for this metric, we're looking at the 14 days. So what was price 14 days ago? What is it now? How different are they? That's more or less what these metrics are showing. So if we now turn on, this is the gradient of the market cap and the gradient of the realized cap. Now, what that means is that the higher the value on these spikes, the higher the value, the steeper the curve, right? Super high value, super steep curve, vertical, right? When you're getting up here, it's vertical. When you're capitulating, let's take the COVID sell-off, right? A vertical drop, very, very low, right? The first major sell-off, very, very low. So that's telling us that there's a huge slope to the downside or to the upside. So the height of these spikes is telling you how vertical it actually is. And for these, during the very slow, mundane bear market at the capitulation point, when it's effectively sideways, very low, right? Very quiet, very quiet. But then as we move through the mid bull, starting to get a bit more, starting to accelerate, getting higher peaks. And then as we head into the late bull, super volatile, right? It's like a heartbeat, very low, quiet and trending, starting to build up, getting a bit more momentum, and then absolute utter chaos, right? And then as we move into the bear market, quietening down into the bear, quiet, starting to pick up, right? And you can see here that we're starting to get these higher peaks, right? So there is more momentum moving on chain. There's more players moving coins around on market caps. You can see that we've moved out of this quiet and trending, which actually didn't last very long. And we're heading into this, starting to accelerate, getting a lot more volatility going on. So that's what this delta gradient is doing. It's taking the difference. So, I go through this a lot more in the masterclass that we've got coming out in January next year. So don't worry about absorbing all of the details, because if you come and join that session, you'll learn a lot more about where this all comes from. But what this purple line is basically doing, let's turn off the other ones. If we take just this history here, so you can see that the price chart goes red and green, and it goes red and green when the delta gradient breaks above or below zero. So what this is essentially saying is that is momentum to the downside or is momentum to the upside? And you can actually see that it picks up the vast majority of these trends, right? Quite correctly. So you can see that it picked up this whole maneuver here. We've got increasing peaks, which is telling us there's more momentum to the upside. And this is starting to say, well, hang on, there is when we were sitting up here at all-time high, our team at Ready Set Crypto was looking at this this metric and saying, I don't think this thing's going to stop. I think it's going to go straight through and slice through all-time high. And alas, that's exactly what happened. We got this drop below. It tried to fake out, and then boom, away it goes. So, there is credence and merit to this thing as it plays out. And if we then look at the 140-day, which is kind of the big beast, you can see a very similar trend where we're actually continuing to break higher, right? We're in an uptrend now in this particular oscillator, well and truly in the green zone. You can see the bull market was almost entirely green according to this metric, bear market entirely red. So, essentially this provides you a bit of a basis as to where we are in the market cycle. And this acceleration is very similar to what we saw here. So again, this tells me we are somewhere around maybe the start of 2017, mid 2017. And so that may surprise some people, but if you base it on previous market cycles, we could be 6 to 8 months away from the end of this thing. So it could be a fairly chaotic run to the finish, but this is essentially what the data and the historical setting is trying to tell us. So what we'll now do, let's transition over and look at some Decred metrics. So that gives you a bit of an idea about where we are in the Bitcoin market, most likely transitioning from early bull into second phase or the third innings before the final euphoric peak. If we now look at the Decred metrics, so I know Pemble Nino has been saying for a very long time, he wants to see the final capitulation, right? We want to see the miners capitulate, we want to see the ticket holders capitulate, and then we want to see huge amounts of ticket buying. And ultimately, that is exactly what we've seen. So we have seen a huge amount of ticket buying come in of late. We've actually seen a number of metrics hit all-time highs, which is super promising. The last Our Network newsletter, we actually went through a number of these metrics. So, on-chain mixing volume, ticket volumes, ticket prices, the amount that's been staked, Lightning's going live. There's a whole lot of things that are supporting this move higher. And to me, when I look at the price action of late, it's telling me that the probability that the bottom is in is very, very high. And what we'll do at the moment, let's start from the ground up. So in fact, let's run through each of these model sets so you understand where we are. Fair value models. So this is trying to estimate, for example, what is a reasonable fair price for DCR. And you can see this is the stock to flow model that I developed. And you can see that it's more or less trying to revert back to its fair value price. So it's starting to get that oscillatory behavior. You can see that this bottom kind of looks like this top, and ideally we end up in some kind of oscillation that goes from that point onwards. And if you look at the residuals, which is kind of the statistical distance away from the mean, Bitcoin is here in blue. You can see that it followed fairly similar trends, right? It oscillates up and down around, and Decred is now starting to get that oscillatory behavior. We've set this significant higher low, right? So this is now a macro higher low. We've broken above. We could get a pullback and then into the next phase higher. So it is very promising just simply from a statistical oscillatory perspective. Realized value is the same. So in most of the Decred metrics, because we have a more dynamic market, we've got pricing against USD and pricing against BTC. In many of these metrics, you'll see in bracket valuation and in bracket pricing, right? Valuation, pricing. So under the realized value, this is the same metric as Bitcoin, but I've written a paper that kind of explores why Decred's realized price is slightly different because coins are always moving on chain. But valuation we'll look at, let's just have a look at these. These are both USD valuation, USD pricing. So valuation is market cap, network valuation, realized cap, market cap. So, we're currently seeing it $430 million, realized cap at 279 million. Pricing is then, how do we convert that? If you divide that by supply, you're going to get $34 coin price and $24 realized price. So that's what these actually mean. Is it's taking it's taking whether it's a valuation and in USD or a value or a price in USD. And likewise, BTC valuation, BTC pricing. So that will just help you understand why there's 4 charts here and what they actually mean, model A, B, C, D. So now we have our BTC pricing, and this is in valuation. So what is the Decred network worth in terms of Bitcoin? It's currently 18,000 BTC. And in terms of price, we've got our 0.004, right? 14. So the block subsidy models, so these are the models that Pemble Nino developed. These are essentially looking at the cash flow of the whole system. So how much, whether it's Bitcoin or USD denominated value, has the block reward issued and the fees. So if you think about any blockchain as a cash flow producing system, the supply side has an income basis, right? They're earning a certain amount of value, and they're earning a certain amount of value from the block reward, and that is sustaining their business. Now, if the price goes down and their electricity costs are higher than their income, then they're going to start turning off miners, right? Eventually, they're going to go into stress. Some of the miners who turn off, their hash power will go to somebody else. They'll gain share. That means that they earn more coins per hash, and the strong miners basically gain market share. The weak miners drop off the map, and then the strong miners sell less, and that's the whole mining process. So the block subsidy models tend to set the price floor, right? The absolute bottom level of bear markets. So let's look at the USD and the BTC price models. So in the USD sense, this is way more important for miners because miners have USD denominated costs, right? They have hardware and electricity, and the current energy contracts are all priced in fiat currency. So you can see here that in the previous cycle, we dipped below. This is the total. So the whole Decred network, treasury, mining, and stakers, just mining, just stakers, just the treasury. So in USD pricing, we dropped below the total income line for miners. So now miners are in stress, right? And then we had our rally north. In 2018, we dropped below the total. So the total network is now, feeling income stress. We tested it again, and then we broke below the mining line, right? So this is starting to say this is the COVID sell-off. So now we're in this point where the miners are seriously stressed, right? We had a bit of a rebound, and then we put them back into stress. The market sold off again, but we set a macro higher low. And then we rallied off, right? And during this time, we actually saw many signals that were saying that we were having a mining capitulation, right? Miners were turning off their rigs. They were stressed, and many people think that's a bad thing. That's a good thing. Mining is a cycle. It's a very free market capitalist type system. Some miners are better than others. Some have better capital efficiency. Some set up their rigs at the right times. Decred miners at large got really challenged. They had a very, very difficult existence, to be perfectly honest, because ASICs launched basically at the end of the bull, so they had no bull fuel left to pay off their mining rigs. But miners dropping off the map is a good thing because it's the healthy deleveraging. It's the natural equilibrium that these blockchains, they always seek towards. The difficulty adjustment will keep the network secure, and new miners will come on when it's profitable to be so. So this is actually a positive and a healthy process, and this happens cyclically all the time. It happens to Bitcoin, it happens to Litecoin, Decred, all mining chains. So this was starting to tell us that we broke below, we retested. Now that we've rallied, this looks like a bottom. This looks like a strong bottom that miners have essentially put in. And on the BTC pricing, now if you're an investor in DCR, yeah, you're going to be looking at the BTC price, right? Because you're not acquiring coins with electricity and USD, you're acquiring coins with BTC in many instances. So your cost basis, what you care about is the supply side in BTC pricing. And very similar, this is the purple line that now comes into play, the proof of stake block subsidy line. We got our sell off below, and then we had our repricing. Yep. We've had the very, very same trend. Break below, rebound into, this is a nice little bull flag. I like this. So, again, these cycles of putting in bottoms, we've got the USD bottom and we've got the BTC bottom signal. So, again, markets can do whatever they want. We could bloody sell to zero tomorrow and who would know? But the reality is, the fractals that we're seeing here are starting to have some semblance of cyclical patterns, right? So it's starting to look very promising, at least from this, in terms of setting a bottom, which is what these block subsidy models are very good at. This is what it's starting to say. Now, when we get up above, the total level, that is when we start really getting some, some strong strength, and it's basically breaking back above the previous level where we were, which is essentially back up here into the 2019 phase. So, these fractals, here's this fractal, here's this fractal, right? Before the major sell-off. Before the major sell-off, repricing, and away we go. So some of these fractals are certainly coming into play. Now, we mentioned miners. Let's look at Pule and Mining Pulse. So the miners, the Pule multiple, this is essentially the 365 or the yearly average income. So total proof of work block reward in USD. This is how much miners on aggregate the whole network is getting paid every day. When we're in the green zone, right, it means that miners are in profit. We're in the red zone, miners are underwater. And you can see that they've had a very long time being underwater, right? Sorry. This is where they're earning less income than they've got from their yearly running average. What we've now seen is this repricing where the pure multiple is now breaking above 1. Miners now earning a lot more than their 1 year average. So they're now looking a whole lot greener in terms of their profit margins, right? And very similar to the Maya multiple that we saw for Bitcoin, note how the pure multiple exists only above 1 in the bull and then below 1 during the bear. So this is suggesting that we're in a trending market, right? This whole process is once we break above, we tend to stick the landing, right? It tends to stick around because miners are now in profit. They can sell less coins, they can hold more, and therefore you've now got this system where there's going to be less selling pressure on the market and the cycle then continues to almost self-reinforce. If we look at the mining pulse, what's very interesting, so this is actually saying that miners are still under stress. And again, that's not a bad thing, right? So I know there's been a lot of miners moving around because there was, rigs literally moving place in China. For any of you who haven't listened, there's a podcast called On the Brink that Nick Carter and Matt Walsh do. And they interviewed one of the biggest miners in China. I think they have 2% of Bitcoin's hash rate. And he confirmed that during this particular phase, now a lot of Decred miners live alongside Bitcoin miners, they were actually physically shipping their rigs to somewhere else that had cheaper power. So a big reason why we had this complete drop in hash power is actually because miners are physically moving their rigs from power source A to power source B to get a better deal. So we've got slower blocks at this point in time, which suggests that there's hash power coming off the network. And again, that could be weaker miners who are essentially capitulating, which gives stronger miners more hash share. Or it could be that miners are actually repositioning into new places for energy contracts and the like. And we're starting to see a bit of a downtick here. So you can see that it's actually starting to speed back up. We'll see whether this develops into a trend. If we now look at ticket metrics, so this is really where this is the bull fuel where I've been pretty excited by what I've seen. Tickets are obviously the strongest hand action. They are locking up your coins in an illiquid state for up to 100 and something days. This is where you start seeing what the real conviction is of stakers. And for a long time, we never saw a real impulse of ticket buying until very, very recently. So in most of these metrics, so the ticket funding rate is basically, it's measuring how likely is someone to lock up in 28 days, because the average vote time is 28 days. How likely is someone to buy a ticket, right? Just a ticket. 56 days is how likely is someone to buy a ticket, have it vote, and then buy a second ticket, right? Double the conviction. How bullish is someone on the network to want to go and buy a second ticket? And 142 day is measuring the whole ticket pool. So this is essentially saying how many people just stick on auto buyer and just buy tickets like perpetually, right? So obviously small conviction, lots of noise, but shorter duration. More conviction, slightly slower. Really slow, massive conviction. So let's step through each of these, 1, 2, and 3. So on the 28 day, you can see that, historically we've kind of had this oscillation, right? Where it goes red, green, red, green, red, green. We've had a lot of green, right? And we're only just getting slight tick ups in the red, but we're getting these larger gaps. So, we're getting a larger volume of green and also to a greater extent. So this is saying that people have a higher likelihood of wanting to lock up tickets than they want to basically to not. So, this is a positive. We can see that some of these very, very deep maneuvers back here would be because the coin supply was much less. So during a peak bull market, the amount being staked relative to the coins on supply was a very, very different ball game to what we have now. This is a more matured market. But you can see that we're still getting a fair bit of green. But you can also see that on the 28 day, it's relatively noisy, and it can be a little bit challenging to actually pull signals out from this. Now, if we step up a level in conviction, this is the 56 day, how likely is someone to buy their second ticket? So they liked what they saw when they bought the first one. They like where the project is going. They're willing to buy a second one. And now we're starting to get some very, very deep numbers that actually measure right back to almost the peak of the bull. We're getting these very, very deep moves, which are saying a large number of people. And you can actually line this up, right? Let's pull on our spike lines. If we measure from here, basically from the start of this rally, it's been all guns blazing, right? Everyone is buying tickets, and this is super strong, right? This ticket buying, the likelihood of buying their second ticket is suggesting that this rally is well and truly organic, and it basically has the thumbs up and the happy days from stakeholders. So that's pretty bullish in my eyes. And the 142 days, so this is the big beast, right? This takes a lot of ticket buying to turn this thing green. And we've got a huge spike back towards the final peak. And we've had more green, right? More propensity for people to be buying tickets en masse. And what's actually really exciting about this is 142 days, where we're in December. That's roughly half a year or thereabouts. So that would take us back somewhere to July. This is saying that this whole period through here is essentially where this all started. People have been buying tickets almost religiously ever since mid this year. And that was during a time when, even though we had this sell-off, we got a slight spike up during the peak of this sell-off. And ever since, we've had massive ticket buying. So this actually shows that stakeholders were getting bullish from around 6 months ago. And they've been accumulating and basically preparing to be buying these tickets and using tickets as an accumulation mechanism. And then as soon as we got this final breakout, it's been, all guns blazing. Enough tickets to actually convert the 142 day and overwrite much of this previous history and send the whole thing green. So, it is pretty high conviction signal when you're seeing these big 142 day metrics basically converting and going fairly strong. If we also look at the hodler conversion rate, this is essentially saying, so we've got the realized price, which is all coins moving, and we've got just tickets, right? Think about like the ticket realized price. Now, when there's more coins moving in tickets, this thing's going to go purple. So this is saying that the dominant majority of coins moving are ticket-based transactions. Now that's a double-edged sword, because if you've got lots of coins moving in tickets, it can mean one of two things. It can mean that no one cares, and the only people who are moving coins on chain are Decred long-term holders, right? There's no one who's just like transacting and moving stuff around. It's all staking. So that's one interpretation. And the other interpretation is that people are buying coins and then putting them in tickets, right? So that's really what this is showing. And if we take that previous metric, which tells us that people are actually buying more than usual, and then you see this hodler conversion in a fairly strong downtrend. This is saying more tickets than regular transactions. This is confirming probably the latter interpretation, that people are actually buying coins and then staking them, rather than just the hodlers of last resort doing their standard ticket buy, and that they don't care about price. They're staking for the next 10 years. That could very well be what this is, because it's fairly low conviction. And similar to our previous metrics, there's not a lot of amplitude to this. It's kind of just oscillating. There's not a lot going on. But the strength of this downtrend, which is a positive thing, that's why they're blue and purple, because it's not necessarily good or bad. It's more an interpretation. This is telling us that there's strength in this move. People are really buying tickets because they want to hold them, and they're buying them. And you can actually see this, the gradient of the ticket price. Right? The realized price versus the gradient of the TV WAP. This is telling us that there is a huge amount of coins moving on chain, and tickets are essentially dominating that particular flow. So the last ones that we'll look at are these performance metrics. This is essentially what I covered in the latest Our Network newsletter, which is if you don't follow it, Spencer Noon on Twitter has put together a newsletter where it goes through all different on-chain analysts. I think about once every month and a half or once every 2 months, they have a session on layer 1, so Bitcoin, Decred, Ethereum. I think Zcash was there at one point. They might have dropped off, and Cosmos, I think. But anyway, I looked at a few different metrics. So when you combine all of the above, right, strong ticket buying, minor capitulation likely in the rear view mirror, we've got a lot of bottoming signals, strong long-term holding views. If we look at on-chain transaction volumes, right, so how many people are moving coins on-chain? If we look at the amount of coins that are in tickets and staking, and we look at the Coin Shuffle ++, right, the new implementation, and let's look at DCR DEX just for fun. So the network daily transaction volume, we had an all-time high of 5.16 million coins moving on chain. So this is a combination of mixing, tickets, regular. So we had an all-time high supporting this breakout, right? So a lot of people are moving coins on chain. Yeah, sure, some of them are probably selling into strength, but a lot more, I mean, you know, again, we're looking at the amplitude of these things, and the volume is picking up. I would rather people be using the chain for whatever purpose. I don't care what they're using it for. As long as people are using it, right, it's a strong signal. And we've only seen a little up, I mean, we've seen an uptick in Coin Shuffle ++, but, you know, we're talking about 6 million coins moving in a day. If we look at ticket staking volumes, we hit an all-time high of 54, I think it's 54.1% of all DCR staked. So that was supported by 2 all-time highs in the ticket price. So one after the other, 188 and then 190. So, and you can see that the 30-day moving average of the ticket price is up to 168. So, you know, this thing's been in a strong uptrend the whole time, but now we're getting an acceleration. This was super bullish buying of tickets, right? And we got the all-time high in total supply staked. If we look at Coin Shuffle ++, so this is the new privacy feature that's coming out in the GUI wallet, you can see that we maintained this fairly long-running 110, 120,000 DCR per day. For context, I think, don't quote me on it, there are sites to actually verify this. I think that Bitcoin does something like a few thousand or 20,000 or something BTC a month. So if you actually, I think that's about right. It's certainly in that order of magnitude. So if you compare 120,000 per day, we're talking about a fair, I mean, again, there's obviously a price difference in, you know, 0.1 BTC is worth more than 1 DCR, but, you know, there is a balance. I think if you actually multiply this out on USD terms, I think that Decred is almost an order of magnitude more USD volume. It's something like $5 million a day is being mixed. And you can see that we hit another all-time high here of 272,000 DCR, right, which is, I think, 4% of the supply mixed in a single day. So, and we're seeing this uptick. So we're now up to, you know, a 30-day moving average of 150. So, you know, we've added something like 50% or 30% to the mixing volume per day. So, you know, that's a number of fairly significant all-time highs. And overall, you know, Decred has a coin supply of 12.4 million coins, and we've cumulatively mixed 47 million, right? So many coins have been mixed many times, and it's just good for privacy overall, and it shows a genuine product market fit. And just to close out, so please bear in mind that the data here is static. Eventually this data will be built into my charting code, so you'll be able to see the total volumes from DCR DEX. This one is currently frozen back on the 12th or the 10th. So this is showing the DCR price on the DEX in blue and the DCR price in Binance. You can see that we're actually getting, you know, fairly good coupling. The DEX is managing to follow the pricing. And in terms of the volume, now this is where it gets really interesting. So since DCR DEX launched, we're measuring how much volume has traded in terms of DCR. How many DCR have been traded? I think this is about a 48-day period. So the DEX has traded 500 or almost 600,000 DCR. During that same period of time, Binance traded 1.9 million. DCR DEX in the first month and a half traded 33%. It's about a third, 33% of Binance in the first month. And you know, this thing is command line only, right? It has a GUI, but it requires some technical skill to get installed. It will come to SPV over time. That will evolve and become much easier for people to access. But we are talking about a substantial volume of coins moving and being sold on the DEX. So again, we're talking about product market fit. There are people who genuinely want to be buying DCR on the DEX, and there's clearly people who want to be selling. So, you know, this is a really, really positive sign. It's showing that the products that DCR is putting out have product market fit. And you know, they are valuable for people who have been trying to use this kind of technology for some time. So it's fairly promising. We're seeing a lot of you know, stakeholders on aggregate are bullish. We're seeing many of the actual on-chain metrics, and you can't lie with on-chain metrics. It's not something you can fake. You can't wash trade on-chain volume because you'll go broke. The reality is that all of these things are organic and real prints. And that's what I love about on-chain data is it just is. It's factual information about what is going on the chain. And once you understand how to interpret it, it gives you a huge leg up in terms of just knowing the health of these networks. And you know, you can make decisions based on that information. So that pretty much brings to a close most of the elements that I wanted to go over. I really encourage anyone to just spend some time playing around on the website. Let me know if there's anything that you find that you know is not as clear or could be clearer. Over time, eventually we'll be adding things like descriptions at the bottom of these. At the moment, this is kind of an MVP, so we will end up getting descriptions, and you know, you can see here that we lose our banner, so you have to use the default back button. But over time, we'll build all that stuff in. It just, you know, it takes time, and you know, it's eventually going to become a more full-featured suite. And I think the important part is that in the new year, so come January, Purple, Nino, myself, and Mav from Ready Set Crypto are all building out essentially a masterclass to go through all of the metrics that we've just gone through and many, many more, but really explore them from a fundamental perspective. So you can see all of these charts online, and you can look at them and they look good, and you know, it's nice to see green colors, but what does it actually mean? And what this masterclass, it'll be a subscription service, right? And the idea is that you basically get insight into Nino and my mind, right? You get to ask us the questions. We're going to have chat rooms and things. And also each metric, we will go through a fairly in-depth exploration of what the metric means, how it's constructed, and how you actually apply it. Not only just like what we did today, which was fairly high level, right? We're just looking at the qualitative. Oh, here's a pattern and a fractal that we saw before. What it will actually go through the process of doing is explain the fractals, but also help assign probabilities to it. So it's one thing to just see a pattern, but it's another thing to actually know how likely is that event to occur. So when you can assign probabilities to things, you now have confidence, right? You can make a decision and have, you know, 90% assurance that it's going to go in the direction that you think it is. And this becomes extremely important as we head into the extremes of this market. So as things really start to get heated and we get FOMO, it's very easy for people to get, you know, lost in all of the hype and believing much of the story, and forgetting that these are still, you know, they're tradable assets. And ultimately, when the bear market comes, it could be angry, right? And it's about understanding where we are in that market cycle. What is the probability that we're transitioning or moving to different market phases? So, you know, the whole process of this this masterclass session will be to try and give you know, people like yourself, retail, access to knowledge that, quite honestly, I don't even think institutions are using yet, but I'm positive that they will be. So this kind of stuff at the moment is true edge. A very large portion of people have no idea that this kind of data exists, and I think it's a huge opportunity for people who are paying attention. So certainly be on the lookout for that masterclass coming out in the new year. It's something that I've been working towards for a number of years, to be honest. It's been a long time coming, and it's something I'm really excited to roll out because I think a lot of people will get a lot of value out of it. And you know, you get access to ask me questions, to ask Nino questions, to just explore and develop your own understanding further. So it's something I'm really excited to roll out, and you know, I look forward to all the questions and everything else from people as it comes along. So thanks all for tuning in. I wish you all a very, very Merry Christmas and happy holidays. It's been a pretty chaotic and a crazy year, but in the crypto markets, everything is looking pretty bullish. So, you know, stick with it, keep a clear mind, and as always, if you have any questions on anything, feel free to grab me and check in. And until then, if I don't see you until the new year, Happy New Year and all the best. Cheers.